because what it does is resuscitate a system. The banking system was in cardiac arrest. Something had to be done to get it going again. For the government to take preferred shares, non-voting preferred shares, is a way to restore equity, get stock prices up, and get banks in a position to lend again. Otherwise, their balance sheets will continue to be decimated, and the economy will go into a free fall.
Does anything in this government-involved part bother you?
Well, what bothered me was that the government helped get us in the mess in the first place. Freddie and Fannie debasing the dollar, crazy accounting rules like mark-to-market, which destroyed balance sheets. So, yes, the government has a lot to answer for, so it can come to the rescue for once instead of putting us under the gun.
All right. Now, I talked on the phone in the weekend special I was doing on Fox News Channel on this very issue, Steve, and Wilbur Ross, a guy who's almost as rich as you, was saying he kind of has mixed feelings about competing with the government for investments he might take out in those very enterprises.
Well, the government is not going to be elbowing out. As a matter of fact, the government has made it clear, or I think will make it clear, that they're not going to destroy equity as they did in Bear Stearns, Lehman, and other companies. That's why, for example, the Japanese company Mitsubishi was hesitant about making an investment in Morgan Stanley, for fear that the government, if Morgan Stanley took this preferred stock, the government would trash its equity, trash the common stock shareholders.
Right. And these are non-voting shares. That I much understand.
Non-voting shares. Right. So under the circumstances, this is a way to help save free markets instead of destroying them.
All right, but what if it doesn't work? What if after all of this, we had a great run-up today, credit markets secured today. What if it doesn't work? I mean, do we just keep, seeing what sticks?
Well, the thing is, the key is to get the banking system back on its feet. Restoring equity to it is key to it. One of the things the government really has not done yet is get rid of, or at least suspend, this crazy mark-to-market rule, which forces assets to be valued at distressed prices, which destroys balance sheets, so banks clutch their cash for fear that they might be put out of business by regulators and auditors. So if they follow through on that and do a few other sensible things, short term, we'll be back on track. The key thing is what the next president does, and that's the big overhang on this market in the global economy. Will we go in a Reagan-esque direction, or will we go in a Jimmy Carter direction? And upon that will depend the real future of the stock market.
Well, to be fair, either
well.
Candidate, you're looking at more government. It's just a degree of how much more, right? Pretty much.
Well, in terms of Barack Obama, he's made it very clear it'll be much, much more government. That's where his inclinations are. That's where his instincts are. John McCain has people around him who are very pro-free market, and McCain himself has proposed reducing the corporate tax rate. We have, as you know, the second worst in the world.
Steve, I love you dearly, but McCain also proposed a $300 billion mortgage rescue, which might in fact be the populist and the popular thing to do, but it's not as if he's immune or against the very kind of government initiatives that he blasts his opponent for, right?
Well, it's a matter of degree, and when you look at his tax cut proposals, including his tax simplification proposal, why he hasn't made that a centerpiece, I'm not sure yet. And he's got other good things like R&D credits and things like that to help investment in this country. And so I think that's a much more positive direction in terms of health care, too. He wants a more pro-consumer, pro-patient approach instead of the nationalization, socialization approach that Senator Barama seems to favor.
In the end, more philosophical questions, Steve, but one about confidence that you said is really at the crust of all of this. And that is making banks want to lend. And if you've been badly burned, or if you've looked at, Lehman leaving you at the door, if paper that they had that you owed money on, and you're just leery, period. Will cleaning up your books, or the government taking care of a lot of the bad stuff that was on your books, or providing money for your books, make you any more inclined to lend again?
If you don't fear that you're going to be destroyed by government action such as mark-to-market, I think the answer is yes, once they see spreads out there. For example, if the Federal Reserve starts to buy up commercial paper, offer interest, say 1.25% on excess reserves, then banks will start to get the animal spirits flowing again.
All right. Well, some spirits. Well, we'll see what happens.